Now, as markets continue to remain in a bear grip and volatility stays high, are you thinking of rejigging your portfolio? Then watch this conversation here between our global business editor, Udayan Mukherjee, and market guru Sandeep Tandon of Quant Money Managers. It will really help you navigate in these turbulent times.
Sandeep, it's great to have you on the show. Since you are one of those unique fund managers, CIOs who also look at quantitative methods, as your name suggests, Quant, in evaluating investments. Let me start by asking you what the quantitative desk is telling you now in terms of market signals. Is it suggesting that there are deeper cuts which lie ahead, or are we somewhere close to the bottom for 2022?
So then, we over a period of time, apart from quantitative and the qualitative, the fundamental work, we have also built a lot of things on the behavior side. Okay. And where we combine in our own framework called VLRD framework, where we give 1/3 weightage on the valuation analytics, 1/3 on the risk appetite, and 1/3 on the liquidity. Okay. So we try to capture, all qualitative, quantitative, and behavior, what we call fundamental Atma, liquidity, the prana, and sentiment, the Maya. We try to capture. And it's really helped us in taking a much larger call. So as a house, our macro or predictive analytic models are definitely endorsing that we are, if I have to look at from a very near-term perspective, I think the fear cycle is actually peaking out. So we are at the cusp of that inflection point. First, let me answer first from a very near-term perspective, because that's a concern which a lot of people have. So from a very near-term perspective, whether you talk about a dollar index, or you're talking about more of the currency sides, or even the S&P or the NASDAQ, which has corrected significantly, I think we have reached an inflection point where you can expect significantly up move or ferocious move is also I'm not ruling out, because the fear is too high. 2022, the way we have described, is all about how the employed also the most of the asset class will remain elevated, and as compared to 2009, 20 and 21. So you have to play for a smaller swings in the market. It's going to be very challenging and difficult here.
So are you saying that near term we may have a bottom in place and we may have a sharp rally from here, but you are not confident that a final bottom has been played? Sense lies in actually playing these sell-offs and rallies intermittently from a tactical point of view, but don't get wedded to a view that a clean trend will be visible in the next 6 to 9 months.
So let me then give you first our big picture, which is like a decade perspective and how it's playing out. It'll give you a fairly good sense. So if you recollect right from March 2020, when fear was very high, that's a very classic bottom, because risk appetite was the lifetime low, whatever data we have, and the liquidity was also lifetime high. So it's a lethal combination of bull run. So that lasted till September 2021. And by September 2021, we saw a very unique thing. Risk appetite started for global assets started declining. Money flow towards global equity also was a multi-decades high. And there was a liquidity was also started shrinking. So if I have to see, there was a euphoric move into by September 2021, yes. But if you dissect this euphoria or this money flow analysis, this very interesting data point which came out, that euphoria was confined only to the growth stocks, okay? Which is, if you want to further dissect into a consumption name or the new age technology or the technology companies, where value is bottoming out. So if you look at from a perception analytics, the way we define the market in September 2021, if I have to take a big broader call, the growth stock perception analytics, or what we call multiple and valuation analytics, has peaked out maybe from a decade perspective. So something has changed from September 2021, and could be a bigger and longer term call, because this is the area where grossly over ownership exists, and this is a cycle which has been played out for multi years now. So that is something big change which we are highlighting. And I think from a larger perspective, you will see this bouts of volatility, you will see recovery in these stocks also. But from a longer term perspective, I think something has changed. So value should be your core holding. That's what we have done. And growth should be your tactical position. So if I have to look at, this is a larger perspective which we believe which is going to play out. And from a very near-term perspective, I think whether it's technology or whether it's a consumption name, they are also significantly oversold right now. So, and the way panic is, so we want to capitalize on the fear. So as long fear remains high, we like to participate. And whenever you see complacency, we like to prune down the exposure.
There is no great greed which is visible in the bank nifty, Sandeep. I mean, it's a segment which has underperformed quite a bit. Would you put it in that category of growth stocks which did well over the last half a decade or so, or last decade or so, and which will continue to underperform? Or is your call contrarian on the financial space now as a fund house?
Okay. So if you really, since we're talking about the growth stock peaking out, and if you dissect the bank nifty into private sector and public sector banks, and then you try to look at the perception analytics data, which we try to look at from the behavior finance point of view, very interesting thing is coming out that perception analytics for the PSU, for the public sector, for the private sector bank has made a long-term top. Okay, which means the valuation analytics or valuation multiple, which we have seen in last many years, will shrink and decline. Where PSU banks in the exactly in the opposite side. So in their early stage of recovery, whether you talk about the one of the largest public sector banks or the top 3 public sector banks, is so that's a data point which is showcased. That does not mean we are very negative on financials. We believe financials will outperform IT, financials will outperform consumption on absolute basis as well as relative basis. But within banking, if I have to take a larger or longer term call, then I will like to take a longer term calls on the PSU banks over private sector banks.
I note that many of your funds have names like Vedanta, ITC, Sandeep in your portfolio. Is it staying with that overall call that this year value as a theme should outperform growth? Do these names fit that bill?
So it fits cover that aspect also, but we bought metals quite early, right from October 2020 onwards. We have been bullish on the metal SSPs because if I have to give a much longer term perspective call, right from 2019 we have been talking about that 2020 or this current decade belongs to commodities. So we are extremely bullish on commodities as a space. It's a structured bull run which is unfolding, and we are very early to spot that. And within commodities, we believe agri as a commodity will give the best performance. Okay, if I have to take a big call, which asset class I will to deploy very largest money, I think is the agri. Unfortunately, in India, you cannot play that theme directly. That's the reason in our portfolio we have relatively large exposure towards sugar stocks or metal stock wherever we can participate. Okay, because you cannot play these names directly. And metals, yes, and of course some of the names which you mentioned, they are part of these thesis. And though from a very near-term perspective, there might be challenges on the metal space because one of the near-term cycles are peaking out. But if I have to look at from a longer-term perspective, we remain very constructive in these things.
You know, Sandeep, you're a fund house now and you don't invest only in equities. You have bond funds as well. So I want your perspective. I mean, even the kind of quantitative bearing that you get into your analysis, what do you expect to see with interest rates over the next 6 to 9 months in India? And what would you suggest could be the returns from fixed income funds this year?
So let's talk about US market first, because that's an area where we have more than 100 years of history to talk about, and India is very, very limited. Okay. See, as I said, right from 2019, we have been showcasing that from 2020, the commodity prices will be started rallying because of a lot of earth-related changes. Earth analytics data is endorsing that, and from 2021, the inflation will come back. Now, if I have to look at from a decade perspective, let me give you a very interesting data point. We believe that both inflation and interest rate, particularly on the developed markets, are heading high, and we believe that they can have potential to become 6 to 9 times whatever bottoms we have seen in 10 years, like the 1.18% we have seen in 10 years yield. So something 6 to 9% what we expect should be, that's a very conservative number by 2027-28. That's our big macro predictive analytic models has been showcasing. That's what we have written in our book also. So we remain very constructive from a longer term perspective, but as you say that all moves will not be linear.
And you can catch the full interview on businesstoday.in and of course our YouTube channel.
If you like the video, do like, comment, share and subscribe.